the domestic market is pretty mature, so why not expand? They pick up a couple of nice brands there. Lafroig, I seem to remember, is part of that package. It's one of my mother's favourites. So that'll go with Bowmore, so they've got some Isla exposure, which is always good. No, it kind of makes sense. I mean, as Cowrie said again, I mean, this was the strategy right from the get-go, right from the IPO of the non-alcoholic.
Are we onto something here? Because a lot of these venerable Japanese names are very cashed up to the gills right now. They're not necessarily creating jobs or making a lot of, commitment to human capital, but they're doing this sort of thing. Do you think, buying up stuff overseas is going to be something we talked about again and again this year?
Well, I think the Japanese have been moving in this direction for a while. Whether or not it's good for the Japanese domestic economy is a moot point. I mean, I would rather see them, with some encouragement, shall we say, from Abe's third arrow, spend a little bit more on the domestic kind of wage side of the equation, which would, finally improve the lot, as it were, of your average Japanese salaryman. And therefore, if Kuroda's looking for a 2% inflation target, I'd rather see it come from the demand pull side than the cost push. So my view is definitely I'd rather see it on the wage side than not.
Okay. Mark, say hi to Oriel, 3,700 miles away.
Hi, Mark.
Hi, Oriel.
Belated Happy New Year to you. It's good to have you back with us on the show. Mark,
thank you.
Look, let me ask you, when it comes to the dollar-yen cross, I mean, how much is you're very optimistic overall in terms of the growth in the Japanese economy and in the market going forward over the course of the next 12 months. How much does the dollar-yen cross play into this? Because I notice, one of your top buys is in the exporters.
Absolutely. I think dollar-yen's very, very interesting. I mean, it's essentially been the driver of the market really for the past year and a half, and we don't really see that changing. That said, we think that 105 is probably the sweet spot for Japan, frankly. I think anything above that or below that, depending on which currency you happen to be long of, is probably not so good for Japan. Maybe good for the stock price, but for the economy itself, probably not so good. Whether or not we are kind of super bullish on global growth and, by extension, on Japan, is probably overstating where we stand right now at this point. Essentially, the dollar-yen is a function of what the FRB does, which is a function of what the US economy does. So we don't think Japan is necessarily the driver. As your previous guest, your FX guest, was opining, we're still of the opinion that the major driver here is all US, not Japan.
Okay, well, we're certainly seeing some mixed messages coming out of the US market now as well. Mark, thank you so much. When it comes to the short side of the equation, what are you looking at?
Well, I mean, short in terms of our portfolio, in terms of our book, we're looking for kind of the negative impacts of this rather ill-advised consumption tax hike, which is coming in April, which we think is certainly anecdotally, I'm seeing a slowdown in kind of the Japanese certainly looking to buy or certainly to move forward on the real estate side. So I think that may have been done. So we would look to make some maybe some shorts there.